Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. Hope you're having a great day. Let's take another look here at Bitcoin, see what's going on. Wow, what an interesting scenario here. We got this descending type of trend we haven't broken free from, no reason to take a long position. And we also got a decent consideration for the price coming down lower because we keep retesting this lower range at about 58.5. That was a previous fib level. And when we talk about current fibs, my speculation is that it is a worst case or more immediate case scenario. The price does continue lower, which seems probable based on the overall trend for the moment. We can see that roughly 57,000 as well as 55K are the two approximate areas there. There's also 54,000 based on liquidation. So let's go ahead and take a look at that, kind of get started. If you could please hit the like button, comment below. Absolutely appreciate that. Do that every time you watch my videos. It'll help get this in front of more people so less moon boys get the views. Again, nothing wrong with them. It's just I don't really like idiots that tell people what to do and end up destroying their accounts. It's just kind of frustrating. While I like helping new traders become better, more responsible, it's frustrating that that's actually a thing, right? Bitcoin's not going to the moon. It's not going to zero. It's going to do a lot of stuff intraday and the in-between stuff. That's what we want to look at here. We're going to focus more so on the macro today, of course, just to get perspective on bigger movements, but also kind of understand what to look for trend reversal, if that's even a thing right now. Let's go ahead and quickly note, with liquidation, we can see 58K, 57.7 roughly, is that heavier concentration of immediate liquidation. These are the late longs that are soon to potentially get destroyed. It's not a guarantee, of course, because as you build more volume at specific areas, or in this case, liquidity, whatever, the case in point is that there's more support there because that's where people feel the bottom is. Now, market movers, market makers, they're going to be the ones to determine that truthfully, and they're the ones that like to destroy this here and essentially continue the price in whichever direction they see fit. Right now, there's blood in the water, and I don't think they're going to stop. But again, we got to wait and see what happens, right? You got to be patient and try to find the right bottom before you take a long position. At this point, it's still too premature. After my analysis from yesterday, I pretty much said I'm going to wait 24 to 48 hours before I do anything. That's just me personally. Again, if you're a day trader, different story altogether. But from a swing trader's perspective, it's irresponsible to take a long position right now. Taking a look here, though, if we can see 57.5, that's kind of the heavier concentration, about 10 billion at 57.5, and then 57,000. We zoom down, or zoom out rather, look a little bit lower. 54K is the next heaviest concentration. So if you look at the charts, 57,000.5 fib level, this is basically the local fib. If you're not sure how I drew that, simply put, you draw from the most local low to the local high. While I don't have the macro pulled up on this chart, we can look at that here as well, because there is a bigger picture that you maybe want to consider with some larger fib levels. Okay, so just know that there's different scenarios, different ways in which you can draw out your fib levels, but from a macro perspective, you'd probably go from the most recent high to the most recent low. But more so where we're at right now, we're taking the most recent low to the most recent high. Okay, that's generally what we're looking at. So why don't we just go ahead and start from the top and work our way down. First of all, Bitcoin dominance still at an all-time high, or highest point in which it's continuing to do. Basically, it's telling us that altcoins are getting hit pretty hard. So until Bitcoin dominance starts to drop, there's no reason to expect altcoins to start surging. We might see a shift in momentum soon, another couple of days. A lot of times that happens after the bottom kind of starts tentatively defining itself. We'll see altcoins start to take off, and some outliers might be worth taking longs. It's not the case right now. There's very few that are doing that. You were seeing those natural knee-jerk reactions. I think ETH jumped up 5%, dropped 5% in like an hour. Those are just things you don't want to trade. What we look at here, though, we wanted to verify, double-check a couple of things, and recognize that we do have a CME gap, basically a fair value gap, roughly the same thing in a lot of ways. Right here between 60.5 and 61.8. I sent that on my Twitter, Telegram, and Discord last night. In case you're not familiar, make sure to check that out. Those links are below. But the concept there is that this gap will typically get filled. Again, it's not necessarily an immediate thing, but there's possibility if the price recovers that we'll either reject off the top end of that, or just in general, we might even continue higher. There's no real guarantees, but the truth is, the guarantee that we're looking for is that will get filled eventually. Okay, it may not be today, it may not be tomorrow, but in the future that will happen. So we just want to pay close attention to that. Once we start getting closer to that range, there's a solid chance we're going to travel into that area, sweep the liquidation, and pull right back. So what we're looking for really is to see if there's a lot of liquidation accumulating at the 61.5 mark, which there isn't anything just yet, but if there is, then that would be a case in point. Okay. Let's go ahead and take a look quickly at the macro fibs here and work our way down. Just go ahead and look on I guess we can start with the weekly and just give you perspective here that there's a lot of fair value down below the price action. We don't need to worry about that. For the most part, all the immediate fair value has been swept. The recent one as low as 53,000. What I want to get at here is that we're under the 20-day SMA still on the weekly. That's generally not favorable. While the week hasn't closed yet, it seems pretty likely we're going to close under 65K. I'd be very surprised if the price made a run back to that level, at least to round out the week. So just to clarify, we're kind of right in this danger zone here, right at 50 on the RSI, leading to the fact that we're probably more likely to see some downside. Again, this is just a weekly scenario. This is not a guarantee at all like the weekly. I don't really put a lot of emphasis on the weekly. I like to kind of touch on it, but I would say the daily is probably the more the better, more accurate macro time frame, just based on specific moving averages. Because again, when we look at the RSI, we're under 50 now. That's a bearish divergence. While money flow index is kind of averaging itself out, it's still not looking great. And if we look at the RSI or stochastic and MACD, they're both swinging down pretty hard. So again, at this point, we're not in a great situation for the daily time frame to look any good. I mean, we just rejected off the 20-day SMA here as well, and the price wicked up to that 60,200, basically 60,000 even. Probably an easy way to describe it. Had I been awake for that, I probably would have shorted 60,000, honestly. Even though I usually recommend waiting, there's no doubt that we're in a bearish type of divergence, and that taking a short position, specifically with Bitcoin, I'm not referring to altcoins right now, is a better strategy. Okay, I'm not saying that you should short Bitcoin right now exactly, but 60,000 is that that general area that I like to kind of take longs or shorts at. Okay, I'm glad we held off on our long at 60 that I was originally wanting to take, because the price just ran, and that's why you don't try to catch falling knives. Okay, so all that being said, what are we talking about here on the daily? The summary is that we're bearish. Okay, there's no other way around it. 4-hour time frame is somewhat of a transitionary time frame, letting us know we're below every single moving average. We're still respecting this descending trend line until we break the descending trend at the very least. There's no reason to consider a long position. Taking a look here, of course, at RSI. We're back up over 30, so that is good. Generally being over 30 in the RSI on the 4-hour it's not bullish by any stretch. It simply implies that you shouldn't be, you should have closed or taken some profit on your short. For example, for our short trade, we took 53% in 3 days. We had every single target from 64 to 50, down as low as I think 58.5, 59, somewhere in that range. And it worked out pretty well. Of course, $1.6 billion sold off in a matter of minutes. That tends to help, right? But the key takeaway here is that now that we're back up above it, it generally implies that you don't want to be super greedy with your current position going to the downside. Even though there's still a distinct probability the price keeps going down, you may want to consider securing profit. That's kind of what that's telling us. MACD is converging. Stochastic RSI is also converging. Sorry, correction, I misspoke. This is not converging. It's just losing its momentum. Okay? And it makes sense because it was such a momentous downtrend that anything, even sideways action, is going to have it taper off. So that's really a false positive. I don't trust that at this moment. We can also see stochastic swinging up. That's very natural for this significant downtrend. Because if you look at RTD sequential, you can see we were overextended leading into this. And when you saw my analysis from yesterday, you'll know this time yesterday I said this feels like a trap. This doesn't feel right. Because we're overextended, even though it would be logical for the price to bounce off this local high, which was 61.5, it continued to run. Okay. Again, a lot of that is based on myriad of factors that I covered, but the general consensus here is that we're still not back on track. And even if we're overextended, there's no reason to buy this dip. Okay. Now, spot bags may be a different story. My spot limit orders are pretty heavy in the 55 to 50K range. Okay. Now, again, that's just me personally. There's no guarantee it's even going to happen, but I'm pretty well averaged out between 55 and 60, so I'm going to wait for a little bit lower of a price point. Now, the reason why I think that could essentially be a thing is just based on how much liquidation we have to the downside here. While there's a ton above us, don't get me wrong, it would make sense based on this downtrend and just how bad September months typically are in trading, that we probably see somewhere in the range of 50 to 60K as our range-bound activity for this month. Now, again, a lot needs to happen for us to get that way, but I wouldn't be surprised. Okay, so hourly time frame, Ichimoku Cloud, all green lights to leave your short position open. Okay, so generally speaking, at this point, until we break above the descending trend line or get above the cloud, like we need to be here at the very least, preferably here or higher, to warrant a long position. I would still feel uncomfortable taking a long here at about 61,000. That'd normally be a confirming factor that I'd be looking for a long. But something tells me if we get that CME gap filled, we're going to see more of a retracement. Again, depends on when and how fast that happens, honestly, but there's a lot of things that can happen. The truth is, there's no reason to take any long positions right now. Try not to get super crazy. I know everybody always wants to be the person to find that best, lowest price point. But the truth is, dollar cost averaging is probably going to be your best friend right now, and you're better off trading to the downside than you are the upside until things start to shift. We can maintain this range and just hold this 58.5 upwards of about 60K. Then we'll have a much better shot at taking a trade with confidence. But right now, not a lot of confidence right now. And generally speaking, you do want to buy fear versus the greed, right? So at this point, it is hypothetically a better time to consider buying. It just depends on if you're using leverage or not. Okay. So again, high leverage, low position size at the very least, right? Preferably low on both, and you can survive the ebbs and flows. Like for example, we took 10% profit in 5 days from Solana. Not the strongest trade ever, but that trade was fairly well in the red, and we adjusted appropriately based on its key level resistances and the fact that Bitcoin was expected to pull back. So all those things combined allowed for us to save and save that trade. Okay, and that wouldn't have happened if we used high leverage. That's the difference. Okay, so either way, just some things you can think about. I hope you learned something today, though, and I'll go ahead and post our playout chart here on our Twitter, Telegram, and Discord as per usual, and we'll look forward to seeing you on the next one. Thanks again for your support. We'll see you soon. Have a good rest of your day.